G'day, folks. Greg Silverman here for CIOs and bow ties. Another Come Learn With Me session. I just got to show you my T-shirt that I got for the holidays. If you don't know who that is, that's McGlovin from the movie Superbad. My daughter gave that to me. So anyway, having a bit of a laugh. Always got to have a laugh, folks. All right, another Come Learn With Me session. Always got to have a laugh before we read some of these articles, that's for sure. Fresh jitters in China's property sector after Kaisa shares suspended. So a lot of trouble going on in the Chinese real estate market, and doesn't seem to be abating. So we need to be cautious of that. Halt in trading comes amid concerns developer with huge offshore debts may not meet a $400 million repayment deadline. And let's just see when this was published. Do we have a date on it? Sometimes it just takes us a while to get these percolated through our system, but they're normally no more than a month old. All right. This article is more than 1 month old. Okay. Not much more than a month old, I can guarantee that. Trading shares of the embattled Chinese developer Kaisa Group Holdings have been suspended on the Hong Kong Stock Exchange, prompting fresh concerns about the financial stability of the country's indebted property sector. By the way, I don't know if this mentions it here, but the high yield market for Chinese high yield has gone through the roof. It's pretty much a non-starter now for Chinese companies to be issuing high yield debt outside of China. Too expensive. The suspension on Wednesday, and here I'm talking primarily about real estate and probably banks as well. The suspension on Wednesday comes after Kaisa was reportedly to be struggling to make a loan repayment of $400 million by the deadline of Tuesday night in the US, Reuters said, citing a source with direct knowledge of the matter. Panicked investors offloaded shares amid concern that some of the biggest names connected to China's unraveling property boom might also be close to collapse. I read a statistic recently. Apparently, there are 90 million. There are apartments that could house 90 million people. That's the population of, I think, Germany, France, and maybe Spain combined. Don't quote me on that. But there's dwellings for 90 million people that are unoccupied in China right now. Okay. Concentrate on the article, Greg. Panicked investors offload share. Okay. Speculation that China Evergrande, the world's most indebted property developer, will also be unable to access fresh loans to pay down debt, sends shares in the company to a record low. Evergrande has been selling assets in recent months to raise the money it owes to customers, investors and suppliers after borrowing £300 billion to finance many of the 1,300 developments it has in more than 280 cities across China. By the way, the CEO of Evergrande had to sell $1.1 billion of his personal holdings to create liquidity for Evergrande. The Chinese government sparked a crisis within the property industry when it launched a drive last year to curb excessive debt among real estate firms, as well as rampant consumer speculation. Companies that had accrued huge debt to expand found the money taps turned off and began struggling to complete projects, pay contractors, and meet domestic foreign repayments. Kaisa, the 27th largest Chinese real estate firm in terms of sales, became the latest company to spook investors when it announced on Friday that it had failed in its attempt to secure a debt swap that would have brought it a crucial time. A debt swap involves giving creditors shares in the company instead of repaying debts. On Wednesday morning, the firm announced it was suspending trading in Hong Kong, where it is listed, pending the release by the company of an announcement containing inside information. It is the second time Kaisa has suspended trading in the last month. Its shares have lost 75% of their value this year. Right. That's quite a lot. Kaisa had last month announced a plan to delay repayment timelines for some of its debts, offering in exchange for at least $380 million of bonds, which would have given it room to find money further down the line. But the offer failed to win the 95% approval from bondholders needed for the plan to go ahead. Some bondholders sent a formal offer of forbearance on the debt to give Kaisa more time to repay, but it was not clear on Wednesday whether Kaisa would accept. The company has about $11.6 billion of dollar-denominated bonds outstanding. It previously defaulted on a dollar debt in 2015, becoming the first Chinese developer to do so. Analysts at the credit ratings agency S&P predicted last month that a default by Kaisa was inevitable because the developer's liquidity appeared to be so depleted. We believe non-payment risk is high and could ultimately lead to debt restructuring. I said a default scenario is inevitable within the next 6 months. Wow. Inevitable is a strong language in financial terms. The only Chinese developer with more offshore debt is Evergrande, which set off the current confidence crisis in September. The company failed to make payments of $82.5 million on some US dollar bonds at the end of the month-long grace period on Tuesday, setting the stage for a massive default. Most of the $300 billion debt is in China, $300 billion, with only $23 billion denominated in dollars. Okay. As a result, analysts expect that Evergrande will now be restructured or broken up in some way, and that its huge debts will be spread through the Chinese financial system. There you go, folks. Always good reporting from The Guardian. I really do like The Guardian's reporting. There you have it. Certainly not something we're invested in and not a theme that we're playing right now. If you would like to know what we're investing in, check out our links down below. And if you're an investment manager and have a niche-based investment, something that we like, if you can see the niches that we like also down below based on some LinkedIn groups that we've created and curate. Get hold of us. We've got a program for you, and I think it will be interesting for you, a way for you to access our accredited investor network. So hope you enjoyed that one. Very interesting what's going on. New year and fresh problems, I guess. This is Greg Silverman for Come Learn With Me. Out for now.